Independent insurance brokerage. We've been in business for 22 years. We represent more than one carrier, and we're here to talk to you guys about any questions, any doubts in regards to insurance, homeowners, commercial, or vacant properties. Thank you for having me here, and have a fantastic day.
Good morning, everybody. My name is Mark Wu, and I'm agency owner here at Allstate in San Gabriel, almost coming up on 26 years. As I was reflecting back, I actually started my career, I lived on Delta Avenue in Valley, that's about 3 blocks here, and I remember with my wife walking up and down the streets, door knocking to get businesses, and even going to that corner lot that you have on Walnut and Valley, and going into that office. So that was all happening during the shower. But this morning, I was feeling pretty good about myself, and I was telling my wife, hey honey, in your wildest imagination, would you ever imagine that I would be a successful business owner and I would be able to provide you this house? And I have the privilege of speaking in front of the board. And without skipping a beat, she put me in my space and she says, honey, you're not in my wildest dream. And then I heard, her say something about Brad Pitt, maybe Tom Cruise. But anyways, I am most thankful for many of you. I know I've had a long career here, and many of you have given me the privilege of being your own personal agent, and that's what I'm most grateful for, and that's why I give back to the board. Thank you.
Great. Thank you very much. Let's get started. This is a question for Mark. Why is it necessary for not just any buyer, but a cash buyer as well, to purchase home, landlord, or fire insurance?
Okay, many times in this market, as you know, you guys are dealing with all cash buyers. And cash buyers, the way you're getting the deals is you're going, okay, we could close it in 2 weeks, or we could close it very rapidly and short. You know, and yes, they have the wherewithal and they're financially secure to be able to replace that house in the event it burns down. But what you oftentimes don't factor in is there's a liability issue involved. What if you close tonight and I'm representing Natalie here, and it's a cash buyer, and she comes to me as her realtor, and she goes, well, you know, let's close this deal, and we don't have time for insurance and whatnot. And I, as a realtor, say, don't worry about it, we could get it later, all right? We close today, tomorrow. Marcus is looking for a big payout. He pretends to come on her property, trips and falls, gets a hip replacement, now is out of his $1 million a year job. He's coming after her for a big amount of liability suit. So that exposes Natalie as a cash buyer. And so oftentimes when cash buyers go into transactions, that you as a realtor are thinking, okay, let's just take care of the property later, nothing will happen in a day. But what you fail to realize is that liability concerns can happen, and that is what tends to nip a client in the butt.
Okay, and keeping on the same theme of liabilities problems, how difficult, Gus, is it to solve one of those claims, or what would happen if you do have a claim?
You know, and that part of the question, I don't think it's difficult, it's just extremely expensive. A liability claim can totally leave you with no money in your bank account. Because we're not just talking about the losses, the medical bills, and the problems with the investor. You know, the legal fees involved and all the time consumed can break your business down. Liability insurance is extremely expensive. Extremely affordable. It's extremely expensive not to have it. So make sure you talk to your insurance agent and ask them all the options when it goes down to liability coverage.
Why are lenders requiring, going back to Mark, are all homeowners policies the same?
Okay, can you throw up that slide about the homeowners and the different amounts? Oftentimes, I get this all the time, and it's like you get a policy, a proposal, and you as the realtor and the buyer might just go down to the bottom line and look at the dollar amount, and you feel that you're comparing apples to apples, and so then you recommend the cheapest price to your clients, and that's it. And to let you know that all policies are not the same, all right? There's different coverages built in within the policy. There's also what we oftentimes in the market call extended limits. Do you see the slide where it shows the three? Oh. They're trying to figure it out, but some policies like this fair plan, all right? Yeah, it's only on one, but if you could bring it slower down. I'll give you just a quick example because I think that it's easier. Can we get them on all the systems or? That's okay, as long as it's working in front of me. But as you can see, all these companies, A, B, C, and D, right? You're looking at this, they all have $300,000 limits, all right? And then you come to the premiums and you go, you know what, that $400 premium is the best, so you recommend that policy to your client, all right? But in event of a loss, all these companies, whether it be A, B, C, or D, this is the maximum they would pay in the event you had those coverages. So even though company D is at $465,000, they pay all the way to $450,000, even though they insured it for $300,000. Whereas company A only paid $300,000 in the event that there's a loss. Why does this affect you? Well, you know, when we put replacement costs as agents, it's a guesstimate, all right? We don't have the ability to send out contractors, the electrician, the roofers, the whatnot. So it's a rule of thumb thing. What companies do is they either have a specified limit policy with like company A, where that's all you get, or they have something called extended limits, which gives a percentage above the top number, all right? Like this company would have 20%, this company 25%, this company 50% above the limits. How does that affect your buyer? Well, let's just say, again, using Natalie, I closed on that house, it burns down. We thought $300,000 was well enough. And then we realized, hey, you know what, material costs have gone up, labor costs are up and all that, and now it's gonna cost us $390,000 to rebuild, all right? Well, if she would have had this policy, she'd be $90,000 short. If she would have had this policy, she'd have to put $30,000 out of her pocket. And if she'd had this policy, she'd only have to put $15,000, but yet if she had this policy, it would have covered the whole $390,000. So that's why all policies are the same.
To piggyback on that part, I think that a myth that is a true reality among realtors, and you will correct me if I'm wrong, Mark.
Only if you don't accuse them.
No, most realtors only care about the loan balance to be protected. You know, the property is worth $500,000. There's a $400,000 loan amount. I only want a policy for $400,000, which is not the best way to protect your client or your investor. Because like Mark just explained to him, if the property has a value of $500,000 and we issue a policy for $400,000 with no extended coverage, your client is going to be short $100,000 without taking into consideration any out-to-code building and additional items that usually put more money into the contractor's pocket. So it's extremely important to be careful what you request when it comes down to fire insurance.
Perfect. This is a question for you, Gus. What's the difference between fire dwelling coverage and homeowners insurance packages?
You know, in that one, I think it's extremely important to understand the difference. Just like Mark explained right here, not all policies are created the same. You know, fire insurance is the basic limit required by any lender to issue your loan documents. But fire insurance does not protect personal belongings, does not protect liability coverage, does not protect medical losses, legal advice. Homeowners insurance and fire insurance are two different type of coverages. Unfortunately, when it comes down to real estate, most of the times, 99% of the times, we tell the clients, don't worry about it, we're gonna take care of your homeowner's insurance. But if your agent or you are issuing a fire insurance policy and this client becomes someone losing money because of a loss and they don't have the necessary coverages, you only issue a fire insurance policy, but they needed liability coverage, you could be liable for that. So be extremely careful when you understand the difference between fire insurance and homeowner's package. It's not the same.
Perfect. Mark, why are lenders requiring HO6 condo policies?
Okay, I have a slide for you. I like viewing just in case I don't speak clearly, but several years ago, actually 2-3 years ago, Fannie Mae and Freddie Mac, the loans and all that, started to require what they call a HO6 or wall-in coverage. So if you can, look up there. So in the past, you know, the Fannie Mae did not care about mandating this and what was happening. But as you know, in the last 4 or 5 years, when the market took a dive and all the lenders were taking back the companies, the loans and whatnot, what they were finding out was when they were having a loss on a condo association, many of the interior structures or what they thought were covered under the master policy wasn't. So a client or the lender itself was suffering tens of thousands of dollars worth of losses, all right? Also, there's been a lot of changes in our industry because a lot of people like to upgrade and whatnot, and anytime there are betterments on a condo, for instance, using Natalie again, I sell her this condo, she hates the linoleum, she hates the dated, what do you hate and what do you like? You like granite countertops, you like crown moldings and whatnot, and she makes all those changes. All of a sudden, that in many CCNRs becomes her responsibility. So it's thrown out as common area and it becomes her interior or walls in. And so as a result of that, you know, the requirement now is that anytime you're closing on a condo or planned development, you have to have 20% of the purchase or appraised amount as the interior dwelling, all right? Now, in my personal opinion, that is overestimating and over-insuring, but that is what it is, because what the banks don't want to do is go and read each of the CCRs and figure it out. What is really your buyer's responsibility and what is really the association's responsibility, all right? They don't want to get in that fine line, so they just went with the 20% of the purchase price. It over-insures, but it meets the lender's requirement, and that's what we're up against. And unfortunately, if you want to close in this market, you have to abide by those rules.
On that line, Gus, if you could tell us, what should people who are purchasing a condo look out for in terms of how they're going to be insured?
Well, you know, like Mark stated, your homeowners association is gonna protect anything outside of your unit. So you gotta make sure you have enough coverage for your personal belongings in this case. Anything that is inside of it is not protected by your homeowners association. So you gotta make sure you have a nice inventory, that you present it to your agent, and make sure that you get enough coverage to protect yourself on top of the liability coverage provided by your homeowners association.
And let me just add, you cannot tell what is your buyer's responsibility as far as structure is concerned by the eye. You know, a lot of people will say, all right, I'm looking at it, oh, that's a common wall, therefore it is covered by the association, all right? What defines what is common and what is not is the rules and regulations called the CCNRs, all right? That is what, so don't get into the position where you look at a condo from outside and you go, in fact, that just happened to me yesterday with unfortunately, a realtor where he was thinking it was one way and it was really the other way, because I will always question, what does the CCNR say? So don't tell me what it looks like, because that doesn't allow me to determine how much insurance I got to place in the interior. Because it could be like some of the nicer condos that you seeing coming up, like the $1 million penthouses in downtown LA and a couple of them in Pasadena. The Master Association does cover everything, all right, even the interior structures and all that. But in many cases, the master policy does not. And so really, you gotta put the onus back on the CCNRs. And my advice back to you also is, you're not an attorney, you're not a lawyer, don't try to interpret the CCNRs for your clients when it comes to insurance. In fact, from our company standpoint, they tell us as agents not to do that either, all right? It has to be at the time of the claim.
Keeping on that line, I'm sorry. Keeping on that line, Mark, what do you look at when you get the CCNRs? What do you actually peruse?
Well, I'm just perusing the insurance section, and because the lenders are requiring us to put 20%, we know we're going to be more than adequate for the interior, because like for instance, if you're selling a $500,000 condo here, we have to put $100,000 in the interior structure. More than not, probabilities 99.9% of the time, the client's not going to have more than $99,000 worth of interior structure. That means something they can't pick up and put on a truck and move.
And the reason I ask that is because people in title, when we send out the CCNRs are huge.
Yeah.
They're like
Big
pages
booklet.
and pages and pages that we may have to sometimes set out in 2 emails because there's a lot of documentation there. So just so that's a good clarification. This is over to Gus. According to RESPA, Real Estate Settlement Procedure Act, when do fire insurance quotes need to be obtained for the HUD-1 homes?
You know, that's a very good question. In the past, you know, I still remember the good old days when you will get a call from the escrow company just asking you for an insurance to close the deal. And you know, we're closing today, we need an insurance policy or evidence of insurance today, and we will go ahead and issue it for them. We can still do it, but according to RESPA, nowadays, the real estate agent must present the quotes to the buyer before they open escrow. If you don't do that as a real estate agent, then you will get a violation according to the RESPA regulations. And that's something that a lot of real estate agents still don't know. And not just on the insurance side of it, title insurance, escrow fees, lender fees, and all those additional expenses must be disclosed to the buyer prior to open escrow. So if you don't follow RESPA rules and regulations, you will get in trouble with your real estate license. And we are here to help you and make sure that you don't get into that situation.
Good. Now, Mark, over to you. Why should one purchase CEA, California Earthquake Authority insurance? We haven't talked about earthquakes. Will FEMA assist one? How much will FEMA assist someone in the event of an earthquake?
All right, this is a good question, and it comes up quite often. Many people assume that FEMA is going to step in and cover your home in the event of a loss. I copied this actually this morning directly out of the FEMA manual. And if you can look at it, what does it say? It says FEMA programs are not intended to return all homes or belongings to their pre-disaster condition. What does that mean? They don't have the money to rebuild. All right? Bottom line. People always misconstrue that all over the country. If you look up Hurricane Katrina, you look up some of the Andrews, you look at some of the older natural disasters that have happened in the U.S., just Google it, and you'll see that part of it is still a war zone. Because why? Those people failed to obtain hurricane insurance, they failed to obtain flood insurance and whatnot, and they thought FEMA was going to be there for you. Likewise, we don't have those type of issues in California, but what we do have is earthquake. The reason why earthquake insurance is very challenging to get and obtain in California is because many companies like the big 3 have decided, and actually most companies feel that it's what they call an uninsurable event, meaning that no matter how long they collect premiums on that, when the big ones come, they can't afford to pay it out, and it would put the company under. So what this did was, I'm forgetting the date, but when did Northridge hit? In 1994?
Mm-hmm.
All right. After Northridge hit, and 1,800 companies went out of business, the year after, many of the major carriers said, we're not selling earthquake insurance. The problem with that is that in California, if you don't offer earthquake insurance, you can't sell insurance. What did that do to our real estate industry? Anybody was a realtor back then? Yeah. All right, it brought us to a standstill. All we had was a fair plan, right? And that was a poor year for me as an agent, because I couldn't sell policies. But one of the things that happened was the California Earthquake Authority said, okay, you know what? We put insurance company in a quagmire. So what we're going to do is we're going to offer a program called the California Earthquake Authority that many of the major carriers here subscribe to. So whether let's just for informational purposes, I'm State Farm, this is Farmers, this is Allstate. When we sell a policy, you have to go back to your original agent that had your homeowners, and then we throw it back into a pot called the California Earthquake Authority, and that pays for the claims and the damages. The only thing is that that's for major destruction. It is very expensive from the standpoint that oftentimes the earthquake policies are going to cost more than the homeowner. So you can figure on doubling the price or 1.5 times the price of your homeowner policy. That's just a basic rule of thumb. But the other thing is there's a high deductible. So if I'm selling Natalie an earthquake on this house and it's a $400,000 coverage, her deductibles can either be $40,000, which is 10%, or 15%, which is $60,000. All right. Then you guys come back and say, God, that's a lot of money. Why should I have it? Well, it's for total destruction or major destruction. So our comeback as agents to you, and not comeback advisement, is, Natalie, isn't it easier for you to come up with 40,000 than it is for you to come up with 400,000 to rebuild? And that's why we recommend it.
Yeah. Just keep in mind, if you are not prepared and that hits and you don't have the coverage, you're still responsible for that loan. You're still responsible for those debts that you acquired prior to the disaster. So make sure that you have the correct advice and ask all the questions to your realtor and insurance professional.
I'm going to ask you both about the recent fires that we've had, you know, in the areas that we have, and then those lead, they say, those lead to flood problems down the line. Is there anything that you would anything that you would advise for those type of homes, or are you seeing that you're having to write insurance policies a little different now, given those two?
Definitely. That brings me back to the first question that you asked between the difference of fire insurance and a homeowner's package. You know, when you see those fires and then you watch TV, you watch the news, and you see all these families lining up to go to the local high school, and then you see kids in on the floor waiting for food or shelter. When I'm watching those news, I just tell my wife, you know, if all those individuals in those lines were to have a true homeowner's package, none of them had to be there. Because the owner's insurance have something that is called additional living expenses, which will give you enough funds to bring your family to a safe place, to the nearest hotel, and if your clothing, your monies, your credit cards are gone, you can always go ahead and purchase all those items, save the receipts, and your insurance carrier will take care of you and your family. So it is extremely important to understand the differences, and yes, we have to write policies differently, because again, if we just go based on price, we might not be doing you a favor. We might get you in a position where you and your family will have to suffer the consequences of that.
This is a very good question, and this is where the rubber meets the road, because you have to be dealing with a knowledgeable agency, not just the agent that might be knowledgeable, but his staff that has to be knowledgeable. Because the question was, when a fire and all happens, and then there's floods and all that, what happens? Well, basically, if your agent hasn't taken the time to explain it, neither your homeowner nor your fire insurance covers flood or what we call surface water. It's actually a separate policy. And so if an agent doesn't understand the dynamics of where the house is, or, you know, he might not take the time to explain that, hey, you're missing this coverage, and so you are going to be in a world of hurt when water comes. Because both the fire and a homeowner policies does cover when those brush fires happen, all right? But what they don't cover, do you guys remember when Anaheim Hills and the hillsides were falling down between Santa Barbara and Malibu, I'm sorry? It's Ventura, right. All those hillsides were falling down just because first a fire came through, then we had massive amount of rains. I think that was like 5 years ago, and all the hillsides came down. Well, landslides are also not a covered peril, neither is surface water. When the water hits the ground and it takes mud and it comes into the house, zero coverage from either one of your policies. So it is a separate policy, and again, when you're dealing with weird, challenging properties, make sure, again, your agent can explain to you what is covered and what is not.
So do you get, like, again, to answer this question, do you get some sort of forewarning knowledge of potential floods from your NHD folks, I would imagine?
Normally, actually, the banks are quite good at this on the whole. The banks will have a flood zone and say flood insurance are required just because they've done the due diligence. But sometimes you have your properties like up here, and it might not be a flood area, but they might be under some tanks and whatnot. I have a client like that. And so that's where the discussion, when our agency is trying to analyze the need of the client, we have to be able to foresee that and not miss that, because we don't want to put the client at risk at the time of a loss.
Yeah, and also the insurance carriers, Mark, they do have what is called the brush area report. So if your property or the property that your client is buying it's considered a brush area, most likely you're gonna have to face a situation like that where if there is fire and then you get these heavy rains, you might have the slide issue and all those things. So the insurance agent should be able to provide you with a brush area report, and then from then you take the last decision as far as getting just your fire, your homeowners or whatever.
Perfect.
Coverage might be in your budget.
One more question for the both of you, and then it will be followed by any questions that we have out there. In choosing an insurance agent, what do you need to look for? What would you say your...
I would say Mark was very clear, and he's been stating it throughout the conversation here. It's about knowledge. You know, it's about knowledge. There is a lot of insurance agents out there. There is a lot of companies out there. You know, but when it comes down to protecting your assets, your investment, your investors, make sure that you're dealing with someone who's truly honest about the business, about your best interest, not about their premiums, not about their commissions, not about their business. It's all about dealing with an honest, ethical, and professional insurance agent. That's my take.
As I indicated, not all policies are alike, not all agents are alike, not all agents within the same company are all alike, all right? So here's some of my bullet points that I think that I feel if I was looking for somebody that's important, all right? And so, first of all, as Gus alluded to, make sure that their staff is knowledgeable and the agent's knowledgeable. But I throw in, make sure they're also licensed. There's a lot of agents out there that use unlicensed people to describe coverages, and that's a violation of our industry, all right? They can actually be shut down. Then make sure they carry E&O insurance, because you know, no matter how good I am, no matter how good my staff is, we make mistakes. We are human. And if we make mistakes, we want to make sure and ensure that your client is covered. Because guess what? If we say it's covered regardless of whether or not the policy says it is. So whoever you're dealing with better have a current E&O insurance provider, and hopefully higher limits when you're dealing with. And then, are they representing A-rated companies? Meaning that, are they financially secure and sound, all right? Do they have the backing? Do they have the wherewithal to pay the claims? And I think it's important that they be a member of your board. You know, don't you? Give back to those that give to you. You see, you know, one of the things I pride myself when people go, oh, why do you consistently go there? I said, well, you know what? These people started my career with me. They helped me gain my career. Yeah, you know, it's challenging at times, but as you know, I am consistently here, and so hopefully you see, well, never mind. That's a problem. Always available for your clients. You know, the worst thing you like and I like is, don't you hate it when you call the office and you get put on hold and you're waiting to, after dial 29 if you want to speak to your agent. Well, hopefully you deal, you know, when you deal with the office, you call, and if they're not having live bodies pick up, what's going to happen when there's a disaster? That's all I say, right? And then, of course, we are in a very challenging environment. When I started in 25 years ago and whatnot, Monterey Park was the only pocket that you needed to really know much Chinese on, all right? And then it started becoming where, hey, I better get somebody that speaks Mandarin Chinese, because it wasn't just good that we spoke some Chinese. And then it became, well, you know what, we have to do with a lot of other languages, because we're having, you know, the great thing about this nation is we have open arms, and you can live the American dreams. But the tough part about this nation, especially in Southern California, is that we got to speak in their language or we're not getting the deal. And I know that you guys have equipped yourself with multilingual personnel, and so, you know, fortunately for us, we speak 5 languages out of our office. I unfortunately only speak English, so I apologize for my national heritage. Provide the service, the level of service. Do they give you a proposal within the hour? Do they bind coverage within the hour to your escrow? Now, naturally, there's exceptions to that, and that has to do with when you're dealing with the very $1 million, you know, $5, $10 million complexes. That takes time. When you're dealing with brush properties, that takes time, because we are at the mercy of the fair plan, because sometimes that's the last resort of coverage that we can put on these high areas. So those are my points, and I hope that you will make it a habit of just not calling an agent and looking at the bottom line and saying, oh, well, that's the best policy, because frankly, you are putting yourself in an E&O position.
Thank you. Any questions for the...
Yeah, good morning. I have a question. There's no microphone, so I'll speak from here. What do you do when you have non-permitted structures? Or non-permitted, I have a fourplex that now is 5 units because the laundry room or the laundry house was converted into a little studio. Is that covered on the
Okay,
policy?
that's a great question, and it all depends on the insurance company that you're working with. You know, if you buy a policy with a fair plan, well, most likely you're not gonna have any type of coverage for that kind of losses. If you have a policy with an A-rated company, for example, I can give you a name, Safeco Allied Insurance Company. If you have a claim in such an instructor without permits, they will pay for it, but that will put you in a position of a non-renewal. You know, and I'll be honest with you, most of our companies do inspections. So if they go and see the property, the unpermitted structure, and it's not cited in anywhere in the records or in the property descriptions, they might come back and say, you know, we either have to cancel or non-renew. Again, there's no one answer, it all depends on the carrier.
On the whole, at least for most of the companies that I have back knowledge on, they don't pay for the actual complex to be rebuilt. That fifth unit, they can't pay for it to be rebuilt from the standpoint of the city will not allow them to rebuild because it is a non-permitted structure. There's a reason why it's a non-permitted structure. They weren't able to get permits. So the insurance company can't restore them back to that position because that was an illegal act. What many companies will do is, for instance, on that example, is that they will pay for the 4 units to be rebuilt, all right? Then if that fifth unit was a converted garage, they will pay for the garage to rebuild, and then they will cash out on the actual cash value of what was in there. So say he threw in a bathroom and kitchen and all that. He might not get the full dollar amount of that, but he'll get a depreciated amount of that. So your clients don't really lose, but they're not gonna get back 5 units, all right? And you guys really have to know that because in Southern California, especially around here, there's so many non-permitted structure, all right? So don't let it be a fear, but on the flip side, if the majority of the home is non-permitted, you might be in a world of trouble because no companies that I know of, including I believe the Safeco, will cover that.
Yeah, but my issue also will be with the extra or the excess square footage that some houses have. I mean, where the legal description is, 1,900 square feet, and the house is 2,700 square feet, and the insurance company
What we
has
do,
it at 27, and the city has it at 20.
Again, it's the onus is up to the insurance companies. Don't, at least many of the ones that I know of, won't go and check, and we don't check against city records and all that. It's up to the client to instruct us, and if they instruct us, we insure accordingly. Now, if 1,000 of that is unpermitted, then it flips back to what I just said. Do the companies just go, hey, you lied to us, we don't pay out? No, they'll take care of the claim. They might get off the claim the next renewal, but what they'll do is they will pay on that in a depreciated amount, that which is not correct.
And I need to slightly correct one of the things that you just said. A legal description and an assessable characteristics of a property are 2 different things.
Now-
When we insure in title, we insure on a legal description, and that has nothing to do with the structure or the square footage. It's the legal description of a property. So what you're talking about are the structural characteristics, the assessable character. But just so that there's no confusion, because some people come to the title folks and they say, oh, legal description, what's the legal description? We have nothing to do with the structure or the square footage.
Yeah, and when it comes down to making additions to the properties, many times county records do not reflect those changes immediately. Sometimes it takes a year or more. But if you really permitted that additional square footage and you have proof of it, the contractor, the engineer, the architect, that will be good for us to grant it. And again, it depends on who you do business with. 90% of my companies do have inspections. That's one of the issues that I have with my clients, because sometimes they don't disclose all the square footage, and then they receive a second notice stating, oh, we found out that you have an additional family room of 1,200 square feet, so now you owe me $75. And then the clients are calling me, why are they charging me additional $75? Why? Well, because we're protecting the way it should be. So it's not that we're charging extra, it's just trying to offer the best coverage available at the best rate from the insurance company.
You have a question?
I have two questions, but I don't have a microphone. Okay, no, that's fine. I have a couple questions. The first one is, if a homeowner experienced a plumbing leak inside the home and flood their house, when they call you, what kind of advice will you give them? And the second question is, with both of you gentlemen are so knowledgeable and good looking, equally good looking, who should I pick for my homeowner? Thank you.
I guess if I sold insurance, you should.
For your first question, the first thing you need to do is make sure how big your claim is. If it's something really severe, you have to call a plumber, try to get an estimate, try to get it fixed. Now, we go back to the explanations given by Mark earlier. If you only purchase a fire insurance policy, most likely we're not gonna cover any of those losses because of the leaking pipe. But if you have a true homeowner's policy, we might be able to take care of it. Now, you mixed two terms here. You said a leaking pipe and a flood. It's two different things. If you have a flood, you have to have flood insurance, right? If you have a water damage loss, then our homeowner's insurance will take care of it. It's two different subjects.
I meant the water damage. It flooded the house.
Water damage. If water damage happens, call your restoration company, call your agent. Most of the times the agents have the resources to refer you to someone to make sure that they take care of your loss, you know? And again, that's why it's extremely important that you understand your policy. And at the end of the day, it doesn't matter how knowledgeable we are, it doesn't matter how much we explain to you. The only one responsible for the content of that policy is who? The insurer. You get a policy, we all get a policy, and what do we do with the policies? Just put them in the closet, you put them in the door in the kitchen when you have all your papers, and when it comes down to claims, I don't remember you told me, I don't remember you explained me, you never said any of that. Well, I'm sorry, you're supposed to read your policy. I'm sorry, it's about accountability, guys. We're here to give you the best advice possible, but you're the only one responsible for the content and the details and exclusions in your policy.
I'll answer your second question first, David. David, if you're personally looking for a young and handsome guy, I tell you to choose us. All right, now I'll answer the first question. Sorry, I had to put some humor in this. Actually, when there are leaky pipes, this is a very challenging situation in the industry because that's considered a maintenance issue. Many times in the past, insurance companies would cover that damage. Now, because restrictions are tougher, they're going to the letter of the law. So when it's a leaky pipe, oftentimes that is not a covered peril. When it's a bursted pipe and it floods the house, actually the policies, if you have a regular homeowner or a condo policy, that will afford coverage. So you will have coverage of a flood inside. Remember when I said flood is not covered? That refers to surface water. Hits the ground first, comes in. But if your pipes burst inside and floods your house, that is automatic coverage. That's considered more water damage. I want to say two things, especially to my clients. Thank you, thank you, thank you, and don't file a claim.
Please join me in congratulating them and thanking them for their Thank you for choosing your affiliates.